Hey everyone, I recently did an AMA, which is an Ask Me Anything and presentation about Bitcoin fundamentals with Michael Schutzler. He's the CEO of the WTIA, the Washington Technology Industry Association. I think it went really well. We presented a lot of points about why and the case for Bitcoin, but what we didn't present was why not Bitcoin. So a few folks were wondering, like, what's the other side of the argument? And so I thought I'd just give you some perspectives. One of the things that people will say, and we call this FUD in the Bitcoin community, FUD is fear, uncertainty, and doubt. And they'll say things like, Bitcoin has no intrinsic value because there's no central authority, right? The US dollar has value because the US government and the US armed forces and military is behind it, and that's why it has value. Yeah, perhaps that might be one way of looking at it. But when you really go back into history and you look at the history of money from seashells to rocks to beads to gold, in fact, we've learned over time, hundreds and hundreds of years, of what really creates good money. And we call that hard money. And so that's one way to look at things. And another way to look at that point is human beings give things value, right? Those are things that are driven by market forces. So you can look at the stock market, for example, or gold. You know, gold is valuable to humans because we find it valuable. You know, it's shiny, it's limited in supply. Yeah, so that's one. A second point is Bitcoin is so volatile that it cannot survive, and that's another reason why not Bitcoin. Well, that's one way to look at it too, but and then a counter argument to that is, well, I mean, most things are volatile, especially in the beginning, right? If you look at the history of Amazon stock, which is extremely valuable today in today's stock market, it was also very, very volatile in the early years. So, you know, Bitcoin's volatility will probably decrease over time, as we have seen throughout the last 12 years. And as more and more mature and experienced investors come into the space, we'll find that volatility decrease. And then also again, it's the hard cap supply, which is one of the core features of the fundamentals around Bitcoin. There's only 21 million Bitcoin that'll ever be created. And so supply demand is that point of view. Here's another one. A lot of people will say, like, well, 21 million Bitcoin, it doesn't scale, right? I mean, there are far more than 21 million people in the world. So I don't think it scales. Well, actually, that's one way to look at it, but it's not actually the whole truth, right? There are 21 million Bitcoin, but each Bitcoin has 100 million Satoshis in it. So you can think of it as the $1 US has 100 cents in it, or 100 pennies. One Bitcoin has 100 million Satoshis. Also, Bitcoin, you know, people argue that it doesn't scale because of the transactions per second that it can handle. Well, yes, that's one way of looking at it. But the other side of that story is, you know, Bitcoin as a network is the layer one of the technology, but there are things that are going to be built on top of it, like the Lightning Network, and is significantly faster and can handle things like the Venmo and Cash App and PayPal and Visa type of scenarios that people are looking for. So that's one part to look at. Let's see, what else? Bitcoin is deflationary and really bad. So not really. So the real word to use here around Bitcoin is that it's actually disinflationary, disinflationary, disinflationary. Issuances decrease over time. So there are events called halvings around the Bitcoin supply cycle, and eventually it'll cap off and become zero. And so no more Bitcoin will be issued, which is why we talk about the 21 million Bitcoin will ever be created. We have inflation in fiat currency because governments can print on a whim, and there is no schedule. We don't really know what the what the rate of increasing of our money supply will be year over year, right? Remember last year, 2020, we had over 37% of our entire US dollar supply created in that 1 year. Kind of scary in my opinion. But, some people will say, well, inflation is really good. I don't know if I necessarily agree with that, but you can make your own decisions. Another counter argument to why Bitcoin is energy, and you might have heard of this a lot. Bitcoin uses a lot of energy. It's really terrible for the environment. Yeah, that's one. It is a very strong concern around the Bitcoin community and what's going on there. But another way to look at this is, energy production is improving year over year. You have people like Elon Musk creating solar products and different battery products. So as those mature and the technology advances, I think that problem will become less so. If you look at the amount of energy produced or energy consumed to mine gold or recycle, or even our general banking system, the world of Bitcoin and its impact to the environment is significantly less. So you can look at gold mining, like you have to have all these trucks and miners and people, and they gotta like break into the earth, and it's very, very expensive and very, very physical manual labor. You look at the banking and our financial system, we have millions and millions of people literally in banks. We have physical office spaces. We have papers and fax machines, right? And paper checks and the mailing system and all of these servers hosting all of this data. That is also very, very expensive at the end of the day. And the other side to that argument is, well, yes, Bitcoin does consume quite a bit of energy, but if you're going to spend energy creating the most secure financial and monetary network ever to exist, I think that's a pretty good use of energy. So, take it and make your own decisions around that. And then another counter argument to why not Bitcoin is Bitcoin is only used for terrorists and money laundering people and criminals. And that narrative really came out of especially 2014 with the Silk Road and all that, the Mt. Gox. And so the media has presented this narrative that this whole space is just bad, evil people. And we're all wearing dark, evil hoodies and doing bad things, and not so. The other thing that you should know that fundamental about Bitcoin is that it's completely transparent. Everyone can see like all the different wallet addresses, which are accounts. They can see all the money going back and forth. They can figure out, what is the supply rate, and figure out what's going on with our money supply if you look at Bitcoin. And you can also use it to trace things throughout the interwebs. I mean, once you're on the internet, as you know, nothing can be truly, in secret. If you're going to do something in secret or do something nefarious, you're probably going to use paper cash. And as you know, US dollars and paper cash is one of the most highly used mediums of doing illicit activity. Let's see, what else? Oh, a bug or, something, a hacker could destroy Bitcoin is another counter argument. I think this is the last argument. And so people will say like, oh, if there's enough miners and they all centralize, they could gang up on the rest of the network and take it down. If you look at the Bitcoin network today, the largest mining pool is about 15%. And so to go from 15% to 51% is really, really difficult. It's very expensive. You have to secure these really, really expensive mining machines. You have to expend a significant amount of energy to solve these really, really increasingly more difficult problems. And even if you make it to 51%, you take over the network, the amount of time and the cost that it would take to make that happen is so huge that it really wouldn't be worth your while. If you're going to spend that much money and time, you're much better off actually doing it the legit way, getting all those miners and solving problems to add value to the network to actually earn the Bitcoin. Anyway, I hope that helps. I really hope you enjoy the rest of the AMA, Ask Me Anything. Michael Schutzler does a really good job of emphasizing and providing perspective around his personal experiences around Bitcoin, as I do. And, as you can tell, very, very passionate about it. I really believe this is the future, and would love your feedback on my presentation with Michael Schutzler, and if you think it's cool or not, and doing this for as many groups of people around the area. So if you'd like us to come in and give our presentation, we'd be more than happy to share. Don't forget to rate, review, subscribe, and share. And thanks again so much to the WTIA for your continued sponsorship in this very important work. Bye. All right, so Bitcoin fundamentals. I really thank you guys and gals for your time this morning and allowing me to share with you all that I've learned over the many years about this space. And I think it's extremely important, as you can tell, as I've dedicated many, many years of my life to date and also going forward into this space. And so, yeah, I really, really appreciate the opportunity to share. And also around Bitcoin, every person has to go through their own journey in understanding it. There's a lot of different things that you pick up when you go down the rabbit hole, as they speak, around Bitcoin and blockchain. And so everyone kind of needs to go ahead. Did someone say anything? All right.
I heard somebody.
Well, feel free to interrupt, but I'll also take questions at the end, and I'll stay as long as you want, but I'm also available afterwards. So this isn't one and done. So Bitcoin fundamentals. First, just to give you background on myself, so you know where I'm coming from and the journey that I went to understanding Bitcoin and blockchain. So I spent 12 years in management consulting in the world of qualitative, quantitative strategies, and also building out business intelligence solutions, selling it to the big Fortune 500s up and down the West Coast. Really, really awesome. I learned so much about data and databases and SQL Server and Oracle that you could probably don't want to imagine. I also have a background in startups, so I've been dabbling in startups since the late 90s, went full-time in 2014, did the whole San Francisco tour, even raised my first seed round while 8 months pregnant, so it is possible for women. And then in crypto and digital assets, I actually started the journey in 2016, where my husband and I actually started making angel investments in startups companies that were doing Bitcoin and cryptocurrencies. One of those startups actually brought me in as their Sheryl Sandberg. So I went in as their COO and helped them raise their $32 million ICO back in 2017. And ICO stands for initial coin offering. It's sort of like an IPO, but for like cryptocurrencies. You basically print money out of thin air. Currently also the chair of the Cascadia Blockchain Council, and now I'm also teaching full-time this blockchain developer bootcamp. All right, but you're not here to learn about me, you're here to learn about Bitcoin. And when I checked the price of Bitcoin last night, it was $32,000 USD. This morning when I checked again, it was $37,000. So as you can see, the price goes up and down a lot, and it does seem scary for a lot of people that are thinking about coming into the space or thinking about, like staying in the space. It may seem a little bit overwhelming. And that's why I think it's really important that we look at the fundamentals of why this is a thing. If you just look at the price and you're looking to make a quick buck, it's going to be really hard for you to stay in the game and really, ultimately like make the actual gains you're looking to make. But also it'll be hard for you to be on the journey as society adopts this wonderful technology as a totally different kind of money. And we'll talk about that. So, Bitcoin sats have been in the news and the media for many, many years now, but especially the past 6 months. I'm making sure I'm recording. Am I still recording? Oh, I am still recording. Okay. So it's up 48% in December, up 170% last quarter in Q4 of 2020, up 300% in 2020. And if you look at the price expectations for the year of 2021, we're looking at highs at the end of year of $50,000 to over $300,000 per Bitcoin. And that's for the optimistic folks.
Of course, just like any speculative asset, this could go down to zero. So, this is not investment advice, but just sharing with you what's out there and saving a little bit of time in finding this information. And this isn't just the crypto weirdos that are like really excited about Bitcoin, right? Like the whole market is excited. You saw the news about a month ago. PayPal allows you to buy and sell Bitcoin, and volumes are significantly up. Stan Druckenmiller, he's very, very well renowned investor in the global markets, and he's talking about Bitcoin and strongly recommending it. Grayscale Bitcoin. So if you don't want or you can't buy Bitcoin directly, one of the ways you can get exposure to Bitcoin is to actually buy GBTC. And I do this in my like IRAs or 401ks, and it's a nice way to get exposure, but you're paying a bit of a premium to have access to Bitcoin. Coinbase just announced their IPO. They're basically one of the on-ramps, one of the ways people can get into the cryptocurrency space. They're based out of California, very, very, very well funded. MicroStrategy was hitting the waves. Their CEO, Michael Saylor, he literally bought $1 billion worth of Bitcoin, literally a few months. So first he bought $450 million, and then he decided to raise another round and raised about $650 million and bought Bitcoin literally in like 3-4 months. So just really, really impressive. And already that billions of dollars is worth 3x from when he bought. So he's doing really well. Someone mentioned Mass Mutual while we were waiting to kick off the call. Mass Mutual also bought $100 million worth of Bitcoin. Of course, this is a very, 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 very small amount of their treasury, but it's something. Once upon a time, Russell Kung was local here to Seattle. He's an NFL player. He also wants half his pay in Bitcoin, and that's actually happened. And JP Morgan, like big investment banks, are talking about Bitcoin as well. So the whole market is kind of on board with Bitcoin as a real alternative asset and a great way to hedge your store of wealth. But we're not going to be talking about price action or technical analysis on trading tips or tricks. What I really want to convey to you is the fundamentals behind why Bitcoin, and also to share with you like my own personal journey. Obviously, I've been in the space for a very long time on the technology side, and after having my baby about 18 months ago, I literally had a lot of time to sit and read. And so not many people have the opportunity to sit and read and digest for 12 to 16 hours a day. I did. And it was only after this past year where it really sunk in about what was going on and why it's even more dire that I feel the urgency that more people need to know about this. It didn't hit me till literally this past year. And so this quote represents what I experienced. Confusion has become a state of mind, more or less. We're trained to be confused. Quite simply, the people in power are keeping us down, keeping us docile, keeping us consuming with this confusion. It's cultural confusion, and it is deliberate. It sounds a little bit crazy, maybe, if you're, haven't gone down the rabbit hole yet. But I'd love to share with you why I think this is the true state of affairs. So as you can imagine on, why Bitcoin, there's a big problem it solves. And there's a lot of problems we're solving. As an organization, the WTIA, we're working on lots of different problems for our communities left and right. But for me, I think there's a bigger underlying problem that's really driving many other problems in society. And really, that comes down to monetary and fiscal irresponsibility. So obviously, in the world of Bitcoin, not all of us have economic degrees or studied finance and accounting in college or anything of that sort. So there's definitely a big learning curve. And this is a big learning curve that actually a lot of people will have to go through to really understand what's going on today. And as you can imagine, when you think about what is money, money affects us all. It affects like what I get to eat today. If you look at a lot of the Reddit users that are in the GameStop scenario today, They're talking about eating ketchup packets as their tomato soup and pancake batter and pancakes every day for all their meals for literally a year in order to make their ends meet. Money affects where you get your children go to school or where you live. It affects just everything. So here's some key points around monetary and fiscal irresponsibility that I've discovered, but this is not original thinking on my own. I mean, this is the result of me having learned about this from many other folks. So 1971 is a key year. The United States went off the gold standard and officially became fiat money. And so we'll talk about why this is a really big deal. And in 1971, President Nixon told the people that this was going to be a temporary experiment. And that temporary experiment has gone 50 plus years now, right? 1971 to what, 2021, 50 years. This experiment is not working, as I'll talk about. Point number 2, the United States has literally printed 37% of the entire supply of the US dollar ever created in the past year. And there's more printing to come, right? When we're talking about 1.9 trillion, that's like a lot of zeros, like $1 trillion being printed literally in the matter of months coming up on top of it. We all, as humans of the society, and the world depends on the US dollar as its global reserve. 37% of the entire supply of the US dollar ever created was printed last year in 2020. We're not just in inflation, we're in hyperinflation right now in the United States. And for many of us, I'm fairly young. I was not born in the early 1900s. I did not experience the Great Depression, but this is all the reasons on why we should really, really get smart about our financial and monetary situation in the United States. Point number 3, central bankers think that they can control and manipulate the economy for the better, right? When you talk about the Fed and you talk about these central bankers, they're talking about interest rates and what they're setting it at. And, we've heard about this over many years. Many countries, their interest rates are 0 or negative. And for the average consumer, I'm like, oh, that doesn't sound good. Yeah, okay, that doesn't sound good. But like, we all need to stop and think about, what does this mean? And we also know humans, we're frail. I mean, we also have great big hearts, but we have lots of frailties. And when you give humans lots of power, like being able to manipulate the printing of money and interest rates that affects all of us humans, and especially the other 99% of Americans, we really need to be very well educated about this. And we're seeing evidence of why it's not working. GameStop is a clear example of why it's not working. The other 99% are really hurting. Point number 4, inflation is typically measured through CPI, Consumer Price Index. And I've learned about this since elementary school, middle school, high school, college. You're like, CPI, like our inflation rate in the United States is 2-3%. Whoop-de-woo, that's really great. Or is it? And is it really 2-3%? And wait a minute, how do they actually figure out CPI? Does CPI actually represent like what I would assume the consumer price index should be? These are all questions we should be asking. So some quick definitions. Fiat money, like I described, is government issued currency. It's not backed by any sort of commodity like gold. It's paper. Does paper have any inherent value? No, it has. Fiat money has value because the government is backing it, which really is, missiles and muscles, and guns, right? It gives central banks greater control over the economy. They can decide like how much money can be printed, and they're doing that. 37% of the entire supply of the United States dollar was printed in 2020, and more coming. Never, ever in the history of humankind has this experiment gone on this long and this far. And the United States, we are like global superpower, but how long can we hold on when our money, the very basis of our strength in the global economy, is being eroded year over year? Inflation. So like, again, as Americans, and I was brought up in the United States, we're told the inflation rate of 2 to 3% is normal. Our policymakers also think this is great, this is normal. And then if you just like do the math, inflation rate of 3% means prices are doubling every 20 years. And we've seen that. You think, oh, like I bought my house in blah year and the price has gone up. Yay, like the value has gone up. No, the value of our dollar has gone down, which is why the asset value seemingly has gone up. CPI. So CPI, Consumer Price Index, measures the percentage change in the price of a basket of goods and services consumed by households. So like thought experiment, a basket of goods and services consumed by households. Does every household in the United States look the same? No. I'm growing up in Brooklyn, in the top, or I'm in Medina of, Seattle, Washington area, or, I live in the Central District. I'm a bartender versus, I'm the CEO of a said company. Like my basket of goods and services that my household consumes is vastly different. How can 2 to 3% represent like the basket of goods for my household? We vacation differently. We eat different foods. So we should ask, what is this basket of goods that the CPI is really based on? And then this is a question that my husband and I have been asking every single person that we've interacted with literally since 2015, which is why 2016, we started really making big bets in this space. 99% of people don't know how the dollar works. And just as most people don't really understand how the money and fiscal system in our country work, most people won't really understand the technicalities of why Bitcoin works or why it actually is better money. But that's okay. Eventually, the world will adopt, and it's going to be adopting very, very quickly now. You can imagine like 10 years ago, we didn't have map by map turn directions. I used to carry around pads of paper in my car to figure out how to get anywhere. And now we have Google Maps and Apple Maps, right? 10 years ago, we didn't have Airbnb. We didn't have Uber, like all these things that we take for granted today in 2020. Well, actually less so because, pandemic, but technology evolves really, really fast. So I'll keep going, okay? And then I'll let you ask questions. So another quick history lesson. So 1971, the US went off the gold standard. And this is a really, really big year. I mean, it's huge. I didn't realize how big it was. And we became fiat money. And the problem with getting rid of the gold standard, as President Nixon told us was going to be a temporary thing, is that now money only has value because the government of our country says so. And the US dollar is pretty big influence in the world, as you know, right? And it's a world reserve currency. So everything that happens in the United States affects all of us in the globe. There's this term called quantitative easing, QE. If you happen to like be browsing your TV channels and you're on CNBC or like some, finance, so they're talking about QE every once in a while. And like, what does that really mean? It means they're printing, the ability to print money. And we see the result of that. Like if you have the power to print, countries will very much choose to print, as we have done here in the United States, to basically print our way out of problems that our country is going through. And quantitative easing is not good. And we're seeing what it's doing to the world. We've, again, heard about these negative interest rates. We've heard about, tough situations in various countries. We haven't really actually connected all the dots of like, what does this really mean? And then remember, 37% of the entire US dollar supply was printed in 2020 and more coming. And despite what we're being told by, the government and the media, inflation rate is not 2-3% anymore. At best, it's like 10%. And depending on what your actual basket of goods and services your household consumes, it's actually up to 25%. We're in a like quicksand as a society. And for most Americans, 49% of Americans don't have access to an IRA, 401k, stocks, anything of this sort. It's even worse. And really what happens in 1971, top earners. And for those of us in the tech industry, we're very, very blessed and we're very, very lucky. And for those of us that have like IRAs and 401ks and are able to invest and have stocks and are like making gains on this thing called GameStop or, Tesla, we're really lucky. But it's really, really important for us that are very, very lucky to get very educated very quickly, because this is not good. And the way fiat money works, and that's the system of money that we are on as the US dollar and in the United States, is it literally steals wealth from the bottom. Want to raise taxes? Don't have to. All I have to do is print more. And where does that printing go? It goes to people. It goes to the people that are closest to the printing. And by printing, this is literally like a line of SQL on the back end, and beep, like it automatically appears in all these central banks. The US dollar is already 90% digital. We're not sitting on like pounds and pounds and pallets of paper in these banks, right? We're already digital. We're already on Venmo and PayPal, etc. And we're moving to even more digital with CBDCs. In the G20, the IMF meeting that just happened this past year, everyone's moving to CBDCs, which means central bank digital currencies. We're already moving to a digital currency world. That's basically like the fastest on-ramps to Bitcoin you can imagine. US is, on that front is like significantly behind. Another reason why like we really need to educate policymakers of like what's really happening here. So it's really important to understand Bitcoin. Like why is Bitcoin better money? Well, when you look through the history, and I've looked through the past 300 years of history of money, seashells and rocks and, strings and beads and, gold and silver. One of the main characteristics of good money is that there's a scarcity, right? If I have something that's valuable like these pens, but there's like 1 trillion of these pens, how valuable is my pen? Having a hard cap supply is really, really important, something that the US dollar does not. With Bitcoin, there is 21 million Bitcoins. And you're like, wow, that doesn't really sound like enough. Like, I don't think there's enough for like 1 Bitcoin per person. No, there isn't, which is why it's really, really urgent. Scarcity rate of change. We have no control over the rate of change of US dollars being printed into supply, right? That rate of change number is really, really important. And that really should be as small and as stable as possible when you think about the fundamentals of what is good money. We know gold is really pretty good, right? It's a pretty good solar value over hundreds and hundreds of years. Gold increases at a rate of 1.5% a year, generally. It's really hard to get more gold, right? You gotta like have all those machines and it's heavy and you gotta dig in the mountains and all of whatever they need to do. Bitcoin rate is also hard coded. And by 2040, that rate is 0. There will be no more ever printed in the history of mankind. There's only 21 million Bitcoin. Money that is really good is durable. Like if I use corn as my medium of exchange, like if someone eats it, my money's gone. It's not that durable, and it's not that durable over like, hundreds and hundreds of years. Gold is great as a store of value because it's durable. Gold in 1910 is the same as gold today. Bitcoin is also durable because it's software. Fungibility or divisibility. And so gold can be cut into tiny little, sprinkles and pieces. Bitcoin can also be divided into small pieces like Satoshis. And, the US dollar can be also divided, right? $1 is 100 pence or cents or pennies. And on that note, remember 21 million Bitcoin is the hard cap supply. Satoshis is underneath. So there are 100 million Satoshis for every 1 Bitcoin. And I'll just do some quick Bitcoin math. So imagine the Bitcoin price is 40,000. It was basically 3 weeks ago. And if you want to figure out how many Satoshis are in one US dollar, remember, there are 100 million Satoshis in every one US dollar. Then you take the $1 and you divide it by 8 decimal places out, which is 100 millionth places out, for those that don't remember math. And you go 0.004000, and you get 2,500 sats or Satoshis. And so for those that struggle with the numbers part, that's literally 8 decimal places out. And then in the last, you take the price of Bitcoin and you pop it in, and that's how you figure out sats. And I can talk to you more about like why Satoshis is significant, but I won't cover that right now. So another important characteristic of good money is censor ability. So paper money is government owned. Governments can decide who gets it or who don't get it. They get to decide like who has access to what accounts. Gold is physically heavy, so the government can come in and like take my bars of gold or demand that I put in my bars of gold and give it back to the government, which the government has done. Bitcoin is essentially decentralized, so even if the government wanted to come back and say like, yeah, we don't like what you're doing, give us all your Bitcoin, very, very difficult to do. And why is this important? Well, Russell Kung, the Seattle Seahawk, former Seahawk, he went to Nigeria, his homeland, on vacation. And he went to his bank to get his money out while he's on vacation, as typically many of us do. And he found he had no access to his money. Very angry, he calls his bank and says, hey, I'm on vacation. I need to like have access to my money. And the bank says, sorry, AML laws, we don't do any, we don't allow any transactions with that particular country. He's like, well, it's my money. And the bank's like, no, no, no. We're in the custody of that money. So now it's our money. You're holding your money in our bank, and now it's our money. Portability. If I want to go travel, like I can carry pallets of gold or not, right? Paper money is generally easy to carry, so it was adopted. But Bitcoin is really easy to carry. Like I literally just need to have, my PIN codes, my safe pass codes, or, a small little device to carry it around. Very, very portable. Verifiable. So gold is physical, so you can go into my house and be like, yep, she's got the gold and she can pay for, the sandwich. Paper money is also physical. You could say like, oh yeah, she has the $20 bill to pay for the sandwich. Or, you can look into my bank account, which takes a little bit more work, and you have to have the right access to look into my bank account to make sure I have the $20 to pay for the sandwich. Bitcoin also does, right? Everybody in the world can know that like this particular address has enough funds to pay for the sandwich. And once I pay for the sandwich, everyone knows I've paid for the sandwich and where it went. It's truly, truly magical. And if you haven't experienced like a true crypto transaction, like even if you start with $1 or $5, I highly recommend you do. Happy to walk you through it anytime. So quick summary of like traits of money and why this is really important. Comparison with gold and paper money and Bitcoin, like verifiable, fungible, portable, durable, divisible, scarce. I mean, obviously Bitcoin's only been around for 12-ish years, but in the grand scheme of things, software is eating the world, right? You've heard that term. Software moves really, really quickly. And in terms of technology, Bitcoin is one of the most amazing technologies to have ever been invented in the history of humankind. It is literally the best kind of money humankind could have. And then going back to that other point, like fiat money, that's the US dollar. This always ends badly. We are not at a 2 to 3% inflation rate today. Remember, like at best, a lot of the experts are saying 10%. Some others are saying 25%. If your money that you are earning is degrading at that rate, think about what that really means. It didn't end well for Turkey. It didn't end well for Venezuela. It didn't end well for Zimbabwe. Have you seen their $1 billion notes? Yeah, it didn't end well. And we're doing that to ourselves in this country. Like stimulus packages are very important. Yes, I know people need it, but think about the greater impact that this is going to be having on our country and our US dollar. It is a dire state of affairs that we are in. And that's because humans were frail. Whoever is in control over the money and has zero cost to produce, right? Literally, it's like entering a line of code and bing, $1.9 billion will arrive magically in bank accounts. Whoever has the control will produce. Nice quote. Hyperinflation can take virtually your entire life savings without the government having to bother raising the official tax rate at all. So I beg, I'm shouting gently and very kindly. Do we
You're not
all
being
look
gentle or kind. You're shouting.
Sorry. Do we all look the other way and pretend this is all going to be okay? Or do you trust humans? I trust a lot of humans, but money is a really, really sensitive subject, as you know. Or do we opt out? I mean, this is not going to end well. We can already see this happening in the global landscape, right? Iran's already on board with this thing called Bitcoin. You have Russia going nuts over it. China building out their digital yuan. Like, this is like a big global thing. The US is slightly behind here. There's going to be like a non-peaceful way that there's going to be a transition of the global reserve, or there's going to be a peaceful one. And Bitcoin, if you like fast track the thinking, is literally the only way, the only peaceful transition of the global reserve currency that the world has at its fingertips right now. Thank you. Michael Schutzler last.
Your passion is, of course, as usual, super extraordinary. So I would urge you to unshare your screen and let's let people ask questions or make comments, whatever.
Hopefully I didn't scare all of you, but
oh yeah,
it's a dire state of affairs.
It's a scary topic, and you know, I've heard a lot of people express fear about Bitcoin, and I've also heard a lot of people who will look at the fact pattern that you've laid out and express, you know, fear and concern. There's a reason to be afraid. We've been quantitative easing for quite some time, and you know, I think that I personally don't believe that like Bitcoin is the only answer, nor do I believe that Bitcoin is the place where you should dump all of your money, hurry up and like, you know, because Armageddon or doom is around the corner. But I do believe that, and I'm proving it by voting with my wallet. I do believe that it's an asset class. And you know, the thing that's really hard for this topic, at least in my opinion, is that all of the conversation that you just laid out for everyone makes it sound like Bitcoin is a currency. And there's a ruckus debate about this, because is it a currency or is it actually a security? Is it more like a stock where like the currency of record, and this is really has more to do with what's the platform that you're investing from. So the truth is currencies are they're an asset class, and people have been buying and selling currencies for years. Do you buy euros, and how many euros do you hold? And that has to do with, if you believe in the dollar as the platform, then you consider other currencies securities. From that same perspective, Bitcoin is an asset class. And for me personally, I still think of the dollar as the platform. There are people like you, yeah, I know. There are people like you and many others who are ardent students of this, who believe that the flip has already happened and that Bitcoin is in fact the currency and the dollar is an asset class. And I know maybe that's lost on some people, but it's a fundamental shift in mindset. We are not making investment advice. Please do not take this as an investment seminar. This is simply trying to get you educated on what is Bitcoin and why is Bitcoin such a big deal. So hopefully you got some of that today. So let's ask Arry questions. Anybody?
Arry? Hi, Eileen over here. So just a couple questions, and I'm about to prove that I am on sort of the dirt road on that path to understanding Bitcoin. But one simple question: what creates the value? Why is it fluctuating in value the way it is? Is it simply who's buying? The second one is, it sounds like it's asset, currency, whatever you want to call it, for people who can afford to play the game, not necessarily for poor people. So, all right, go.
So price fluctuation, as you can imagine, in anything that's in its early adoption phase, you'll see the price fluctuate of any asset. I mean, if you remember Amazon stock like 20 years ago, 10 years ago, the price has literally gone whack crazy, right? So anything that's being adopted is going to go through that experience. And one way that I've been taught and believe is a way to look at it is the yo-yo, right? There's a yo-yo effect going on, but there's a man carrying it and he's going up the stairs, right? The adoption is growing year over year. And yes, the price is going up, but you have to think of the long trajectory. And that's the way I would look at it. Secondly, in terms of an asset or currency, and this is only for the rich guys. And I've heard people say to me that, like, I can't afford a Bitcoin. I'm like, no, you don't understand. You can buy $10 worth of Bitcoin. You can buy $5 of Bitcoin. And I personally, I'm doing $47 a week in Bitcoin, right? And maybe that's too rich for some people, and maybe that's really small for other people. Put in a little every week. And don't try and buy it all at once. I told this to many people, and I had a gal, she put in like 100K. She put her entire life savings at 40K. And I was like, maybe you'll just have to grin and bear it for a little while. We'll get there, right? I really recommend dollar cost averaging. Don't try and time the market. I can't even do it. And I'm looking at this for 16 hours a day, right? Don't try and time the market. Buy a little bit every day, and then or every week or every month. I would do every week because lots of things can happen over a month. And then the other idea is, okay, so I have $100 and I buy $100 of Bitcoin a week, right? Just for simplicity of math. The worst case scenario is Bitcoin goes to zero and I lose $100 a week. That kind of sucks. Yeah, it's not fun. But what if Bitcoin does what I think it will do? It goes from like $37,000 today to $370,000 by the end of next year. That's 10x. My $100 a week is now worth $1,000 a week. Your upside is significantly bigger, but your downside is literally whatever you're putting into it. So that, not investment advice, but think about it in terms of that sort of math and that sort of hedge. There's no way any person out there in the world should not have something in Bitcoin.
So let me add something here, Arry, that
yes.
I think is important for people to understand.
Yeah.
When I first came to the WTI in 2013, I really seriously looked at putting money into Bitcoin, and I didn't, because the answer to Eileen's question about why is the price fluctuating was different then than it is now. The people who were buying and selling Bitcoin in 2013, 2014, I like to pretend, like I make it simple. There's a bunch of guys in New Jersey who were treating it like tulip bulbs. They were just sort of speculatively buying and selling. What's different now is that the central banks, this is something that Arry very passionately made the argument about fiat currencies. The central banks of many countries consider Bitcoin the safest, most stable place to put their money. So the supply of wealth, meaning I am taking my Zimbabwe dollars or my Australian dollars, and I'm, as a bank, buying my share of a very limited number of Bitcoins, is taking place. So the reason why it went from $4,000 or so back in the summer of last year to $40,000 just a couple of weeks ago isn't crazy town. It's just because more and more banks, big players, countries are beginning to recognize that Bitcoin is the digital equivalent to gold, and it's a safe, stable currency on which to re-platform their own currencies. It's a really big deal. So, like, I actually have, all of my wealth that's liquid is in a bank called UBS, and it is a bank based in Zurich, Switzerland. Now, don't just stop, Gary. Just relax.
Bank.
Yes, I'm old. So I have all my money managed by a big bank that's based in Switzerland. That bank is in the process right now of adopting Bitcoin as the platform for its clients. So I mean, this may sound scary, it may sound crazy town for some of you, but the biggest banks in the world are moving their money into this platform. And that's actually what's driving the price of a Bitcoin up, because the money is moving from paper currencies to Bitcoin. Mark, I see you chomping at the bit for a question.
So now I'm thinking you're moving from one controller of wealth, which is governments and banks, to a Bitcoin controller of wealth that's being controlled by governments and banks. And to a certain degree, if the Bank of Switzerland, Michael Schutzler's bank, puts all their money in Bitcoin, they're still going to, that's by de facto controlling Bitcoin to a certain degree with the money that they have in it. But before I got into that, I'm thinking, well, what do all the people in the world, the 90+% that don't have a bank or don't have 401ks or don't have cash or don't have anything, they're going to be controlled. The monetary supply is going to be controlled by either the banks or Bitcoin or a combination of both. Where does that leave them? Mm-hmm. At the mercy of hyperinflation, or it doesn't change their lives at all. It just kind of concentrates the wealth in Bitcoin to the people that got in on it in the first place.
Not necessarily. So I'll give you a couple examples. One, my prior experience is I used to work in micropayments, and micropayments, I mean like 0.8 of a penny, like 0.008 to like 50 cents. And we had users, hundreds of thousands of users around the world, and they were earning like pennies, 25 cents, 8 cents, etc. And they were earning it in the form of Bitcoin. And back then, Bitcoin was $200, $300. And as the price of Bitcoin has gone up, so has their wealth. And so in terms of adoption, like the rest of the world has adopted this Bitcoin far more readily and faster and open-heartedly than the United States, because they have different problems than we do, as you mentioned. And so also in terms of like financial products, you know, there's a lot of people that are unbanked or, you know, don't have the financial products that we have here with like Venmo and credit cards and all this sort of stuff, borrowing and lending. Now they actually have access, direct access into decentralized lending and borrowing and credit products. Like in cryptocurrency world, you can actually earn about 6 to 8% yield by just placing your money into a crypto bank, quote unquote. And you know, like with, let's go ahead.
Yeah, I didn't mean to cut you off. I just wanted to add on a related topic. So go ahead and finish your thought.
Oh, yeah. So if you can get 6 to 8% yield, I mean, I didn't get that. I mean, the last time I remember getting 6 to 8% in my savings account was 1990 something, early 1990s, when I was in middle school and I was saving $50 a month of my, you know, allowance at the local community bank. Right today, the banks, if you're lucky, you get like 0.2% yield on your savings, or if you have a CD, it's like 0.2% again. The financial products and the accessibility and the quality of the products is significantly better in the cryptocurrency world today because it's decentralized. You have direct smart contract code enabled borrowing and lending, whereas here, you know, in old financial world, like you have to go to a bank and you have to fill out all this paperwork, and then they have to vet it, and there's a person that has to go through all this blah 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 blah, and it's very, very costly and expensive and timely. I mean, just try and imagine like refinancing your house.
Let me add something for Mark's question here.
Yeah.
You said something that I need to like make sure we get that level set on a fact. The fact that a bank like UBS is adopting Bitcoin doesn't give them control over Bitcoin. It merely changes the value of Bitcoin. It adds credibility to that platform as a currency. When a big bank votes and says, let's start moving money over there because it's a good currency, like those banks have been investing in currency forever. It's just part of what's called a hedge strategy that's necessary for banks to level set where their assets are held in reserve for their clients. It doesn't mean all the money goes to Bitcoin. It just means it's a legitimate currency. Bitcoin is not controlled by any entity. It's called an open or public distributed ledger. This thing that Arry was talking about earlier, where you pay 20 bucks for a sandwich. Everybody knows that $20 was used to pay for a sandwich and it went to Joe's sandwich shop. That's an open public ledger. So everybody knows where all the money is. That's what's one of the things that makes this so powerful and decentralized, is because no government or bank controls it, which scares the crap out of course, every central bank and a whole bunch of governments on this thing. Second thing is, with respect to the little person or the poor person, there was an entire industry that I got actively involved in about 15 years ago called microlending. And basically the idea was, there are very, very poor people in India. If only I could give them a sewing machine, they could now make stuff that is purchased, and it basically, like, think of it like $100 for a sewing machine, or probably not, $200 for a sewing machine, and a power generator for a couple $100. They could make enough money making stuff that they could actually start to produce income for their family. And that's a concrete example of some of the projects that I worked on. The paperwork and the administrative overhead of that industry was so overwhelming because it was based in fiat currency that it actually ground to a halt as an industry. It's being completely eradicated by Bitcoin, because if I'm the little entrepreneur, I keep saying little, I'm sorry, that's not correct. If I'm the poor entrepreneur in rural India and I want to get a sewing machine now, I can borrow the money to get that sewing machine and make money with that sewing machine, all in a digital currency that has zero overhead. And that's happening right now. So this currency, for purposes of relatively rich people like us, looks like kind of like a stock market game. By now, value's going up because more money is chasing a limited number of units. So it's only going to go up for a while, long term, right? It'll bounce around, but over the next 5-10 years, this is a good investment. But for the people who are really getting the most benefit out of it, it's actually life or death from a currency standpoint.
Also, another data point on that.
Wait. Let's get another question, please. Sorry.
Okay, sure. Sorry. I think a woman named Andrea had her hand up for a while.
Andrea, hi.
Andrea, hi.
There were a couple of thoughts or questions that I had, and I'm really inexperienced with this, so my question might sound basic, but how liquid is Bitcoin? And like for a portfolio of retirement savings, right? Like, is it, I would never go invest $100,000, just drop that in to one, put all my eggs in one basket, right? But I like this idea of kind of doing small increments over time as a strategy, but how liquid is it? And then also, can you help me just wrap my head around, so cryptocurrency, you were saying Bitcoin, there's only 21 million. 21 million. Is that the entire cryptocurrency amount, and that all of these others like Bitcoin or Coinbase or whatever all fall under that? Or like, help me understand, like, what's the top level, and then all these other cryptocurrency units or types fall underneath. What is that?
So Bitcoin is basically the biggest cryptocurrency in the market. It probably has like a lion's share, like greater than 90% today. And there are only 21 million Bitcoin.
Okay.
There are other cryptocurrencies that are much newer. You might have heard of Ethereum or Dogecoin, or all these different types of cryptocurrencies. There are over 7,000 different cryptocurrencies in the marketplace today, and they all have different variety of different characteristics you would look at. But Bitcoin is the only one that is truly decentralized, meaning like anytime I do a transaction, there are like tens of thousands of miners that are like validating that transaction from a technology standpoint. And it's the only one that's been around for 10 years or more. And so it's the most mature, most largely widely adopted network for a cryptocurrency. Hopefully that answers your question. Oh, is there a way to move money from our WTIA 401k to Bitcoin? Yes. In your 401k, you can buy this thing called GBTC. Hopefully your 401k allows you to do that. I think most of them do. So one way to get exposure from a 401k or IRA standpoint is buy something called GBTC. There is a premium because, you know, you're not buying it directly. Sometimes the premium is up to 20%. The premium these days is more like 6-7%. So it's actually not that bad in terms of the premium. So now's a good time to get into that. Also, another idea that someone was talking about was, or in terms of the price. So right now we're at like 37,000, nearing 40. And as Michael mentioned, there are institutions coming in and buying Bitcoin, whether it's, you know, 0.% of their, you know, treasury, or, you know, a bigger percentage of their treasury, as Michael Saylor of MicroStrategy did. They're going to start protecting their bottom, or putting defenses into the price of Bitcoin. So once the price of Bitcoin hits about $50,000, then the market cap of Bitcoin is truly large and a truly institutionally grade, like giant investable asset. And so once it hits $50,000, then you have $1 trillion asset class in which big, giant, like my brain can't even handle it, big institutions come in and can start investing their billions of dollars into it. I mean, we're talking about, like, you know, the endowment funds of large universities and, you know, big ones I can't even recall right now. And they will do everything in their power, and they have lots of power to make sure that the price never dips below 50,000, because that's the entry point in which they can come in. And so you can read between the lines of, we're still early right now. You may think, oh my gosh, I should have bought it when it was $400 or $4,000 last year. No, this is still really early in the grand scheme of things. More questions?
Elizabeth? Or actually, if not Elizabeth, then we have one in the chat. But Elizabeth, you're off mute, so do you have a question?
Yeah, I kind of put my question in the chat, but I was really curious more about kind of the legislative landscape that you see going forward for Bitcoin. Because I know, you know, governments are trying to figure out, you know, how we avoid a lot of the criminal activity that was kind of happening early on, but also, and, you know, how to make sure people don't, you know, put money in there without having it be taxed, but at the same time, keep it out of government control. Like, what do you think is going to be happening in the future?
Yeah, there's a narrative that the rest of us in the world are hearing from the governments, and then there's like the real narrative of what's really going on behind the scenes. So in terms of taxes, taxes are good, right? I mean, hopefully we all believe in some sort of taxes. It's good for, you know, roads and, you know, schools and, you know, the overall health of the community. And with cryptocurrency being taxed and, you know, the IRS caring about it, it actually like validates and makes it more real as, you know, we enter the space. And so there's different ways of handling the tax. Just think of it as a stock trade or a capital gains tax. So, you know, in your head, think of it in terms of that math. And then there's a way to track it. So every time you buy, at least, you know, have your own records, because everything's, you know, trust but verify. Every time you buy, note the date, time, amount you're buying, and the currency and the price. And just keep a track of that as much as possible, because that's how you'll get really smart about your own finances. Something that's really important about this space is we each individually now have to become much more educated about money and our finances than we have traditionally been. And so that'll be some part of the learning process and the learning curve, but in the end, it'll make us a lot stronger. What was the second part of your question?
I guess more on how that's enforced. Because it sounds like a lot. Yeah.
So governments are, I mean, publicly, they're all over the map in terms of their handling of this. Other countries have far more regulatory clarity than they do here in the United States. But I really believe it's more of a power
Or the
play.
state of Washington. We're so bad in this state on this topic. Oh my God.
Yeah. And so when I hear the narrative of Bitcoin is used for money laundering or bad stuff, that's total, like that's been disproven like over and over again, but they keep saying it. I mean, even Ms. Yellen said that recently, and I was like, really? I really believe they're buying time. As you can see, like the United States is significantly behind the Singapores and the Switzerlands and the Japans, Iran, Saudi Arabia. A lot of these countries are significantly far behind. So they're buying time so that they can, one, ideally buy it at a lower price under 50K, right? And then two, buy time to figure out how to like, leapfrog the rest of the G20 countries that have been already working on this. And the United States has been working on this, but go ahead.
You just said something like so critically important for everyone to understand. I don't want you guys to miss this. This is like one of the heart of the matters of what she just said. Don't lose this. $50,000 is a very special number because the class of the stock, if you think of it in the terms, becomes over $1 trillion, which makes it a place that hedge funds and trust funds and endowments can play. Clear, important, $50,000. So if a central banker says, gosh, Bitcoin's crap, or hey, Bitcoin is really dangerous, what that does is it decreases the value because people take their money out of Bitcoin because they're suddenly a little bit nervous. So maybe if they have $1 in Bitcoin, they might only leave 75 cents in, right? And of course, most people who are playing this game are playing with much larger numbers. If you get $1 million of Bitcoin, you might take out $250,000 and hedge it out because Janet Yellen just said, still being used for money laundering. Like, ooh, I'll take my money out a little bit. Right? And what that does, this is important. This is the most important thing she said. What that did is it depressed the price at which the central banks buy in at a lower price, right now, $36,000. And then as more money goes in, what happens to the price? It goes back up, right? You keep getting this, you're asking why it's fluctuating because at this moment, there are very large actors who are trying to manipulate and successfully manipulating because of fear, uncertainty, and doubt, the pressure down on the value of Bitcoin so that they can buy in now because there's so much money coming in. Eventually it trips over 50 and don't lose this. Once it gets to 50, then all of those self-interests will now want it to go above 50. And I know that sounds terrible and it sounds awful, but guess what? That's how money works. It's always worked that way. Whoever has the most money has the most power. The power in Bitcoin doesn't belong to a central bank. The power in Bitcoin belongs to the market. And as long as there's still an ability to move the market, and right now there is by the larger players, you're going to see volume changes and you're going to see all kinds of volatility. So I can't stress it enough. It is right now highly speculative. Do not put all your money in Bitcoin. I don't care how excited you are about this. Do not consider this an investment seminar. It is not. But it is a very interesting place to study. And it is, I can't stress it enough. Arry turned me on to this dollar cost averaging company called SwanCoin. There's lots of them. Go check it out. Ask questions afterwards if you want to experiment with this. Put $10 aside a week and start looking at it as like a penny savings account for now to get familiar with how it works. How do you put money in? How do you get money out? It's going to be a really significant asset class, and it probably will become a global currency before I leave the WTIA. And that's like 100 years from now, so.
Yeah.
Any other questions for Arry? We're 5 minutes over. Thank you guys all for taking your extra time. Both Arry and I are super passionate about this. I'm less passionate than she is, but I am. But
I don't think anyone's more passionate than she is.
But I'm a student. I've been studying this thing for 9 years, and I've been evaluating. I am an investor. I'm a substantive investor. I'm dead serious about this space. Happy to help you learn more, point you in the right direction. Arry knows 100 times more than I do about how it works and where to do it. But we'd be happy to help you for anybody that has questions afterwards. Thanks all for attending. I hope you had fun. Enjoy the rest of your Friday. Arry, thanks so much for doing this. Appreciate it.
Bye.
Thank you, everyone.
Thanks, Arry.
Thank you.
Thanks for tuning in. This podcast is non-technical, fun, informative way to learn about money, Bitcoin, blockchains, crypto, and digital assets. This podcast is not financial advice, and your reactions are your total and complete responsibility, y'all. Now, thanks again, and enjoy the show.
What are you doing?
Stuck inside.